Hello and good evening from central London. We are going live from different platforms. So, for those of you who don't know me, Danny Valencia here, and I'm always updating you, especially on Wednesdays, on all things to do with property, especially property investment and landlords. And today we are talking about the cut in England's Bank of England's rates and the market reaction. So I'm excited to deliver this news. Uh, I'm going to make sure that we have quite a few people on and make sure that anyone can hear me. Hopefully, we have people on. I'm just going to give you a few seconds. But again, today's live stream is all about the Bank of England cuts base rate and the property industry, how the property industry is reacting. So, still don't have anyone on, but if anyone's jumping in, please do give me a thumbs up if you can hear me, first of all, most importantly. And then, secondly, of course, that you can actually see me properly. So, anyone who give me a thumbs up would be much appreciated. Okay. So, Ev K, thank you so much for the thumbs up. Much appreciated. Leslie, hello, Leslie. Thank you for jumping in as always. Okay, cool. Well, let's jump on to some of the news, especially when it comes to the Bank of England base rate being cut and how the industry has reacted to this. Let's start with the property reporter. So, Bank of England cuts base rate, the property industry reacts. So, here we are, and we have a boost for market sentiment. Now, looking at many noted that the move would have positive effect on sentiment in the housing market. Now, of course, if you've been following everything to do with regards to mortgages, you will also know that we had expected this far sooner. If it had not been for the elections, then we probably would have got it sooner. But of course, a little note that was passed on to me from a mortgage broker was that they wouldn't do it during the election, so it wouldn't impact or favor one party or the other. How true that is, I'm not exactly sure. Bear with me one moment. I'm just going to fix my camera. Okay. So we all knew that during the election, nothing was really going to happen, and it was expected. So we got Nikki Stevenson, Managing Director at National Estate Agency Group, Fine and Country, added, overall, the outlook for the market is more optimistic than it was in the beginning of the year, and it's expected to continue moving in a more positive direction. The rate cut is likely to have a far more of an impact on the property market than the change in government. And of course, I mean, we do know from the end of last year and the way that this year began, it was quite grim. A lot of buyers wanted to buy, but just not being able to make those numbers work. And ultimately, even without the Bank of England's base rate change, we had seen some movement on those interest rates from those lenders change ever so slightly. And every time they did change, we would see a change in the buyers' inquiries and just movement in terms of buyers overall. So we know that, especially with first-time buyers, it has a huge impact, but also, of course, with buy-to-let investors. I've been speaking to a number of landlords who've been trying to make those numbers work for months. I know one specific one who has multiple properties, 10 to 12 properties, and has his credit cards maxed out, borrowing from family members, and just trying to make those numbers work. He's on a variable rate, and it's absolutely killing him. I mean, day by day, he struggles to try and make all these things work and not to lose his properties. And I know that for sure is the news for many landlords out there. So hopefully, let's see if there is any change, at least from an article's point of view, on those lenders, and perhaps more optimistic. So going back to the same article, All eyes on mortgage rates. So when the base rate changes, so do mortgage rates. And Tom Bill, head of UK residential research, Knight Frank, demand and transaction activity will increase when the auto market gets underway in September and more mortgage rates fall below the 4% psychological threshold. And yes, that 4% is definitely a number that a lot of people are focused on. And whether we'll get to that 4% towards the end of the year, it seems that a lot of people seem optimistic that we will. So others noted, while rates would not drop immediately, it would soon filter through. Stephanie Daly, Director of Partnerships at mortgage advisor Alexander Hall, said, over the past 3 years, many clients opted for longer mortgage terms, especially home movers and those remortgaging. The drop in base rates should ease affordability concerns, making it long-term lending now available up to 40 years. And of course, mortgages of 40 years, it seems like you will have a mortgage until your deathbed. I know a lot of people have criticized that, especially when it comes to their homes. But when it comes to buy-to-let investing specifically, let's look at the facts. I know that a lot of people have reached out to me and asked me, Danny, is it better to get the remortgage, do it for 2-3 years, given that rate and the sentiment is overall that rates will continue to fall over the course certainly of 12 to 24 months. That's given that we don't have some huge impact, dare I say it, another COVID or anything else. That seems to be the path in which we're going. And so they say, Danny, why would I secure myself into a 5-year fixed rate when mortgages are clearly going down? Then I might as well just not commit to a longer term. And that sounds sensible. And yet the issue with that is that we're getting lenders' fees that are huge. And that's going to be an impact. Because imagine if you're paying those lenders' fees and having to pay those fees again in 2-3 years' time, you're going to have to outweigh those fees with the mortgage that potentially may come down. So I hope that makes sense, and that's something that a lot of people have been reviewing. So what makes sense for you may not be the same for someone else. It depends on their situation and, of course, the fees that you're looking at. But let's go on different on the same article in terms of sentiment. So lots of market activity incoming. Plenty of industry experts are predicting boosting market activity, and not only for borrowers. Chris Gardner, CEO, said that developers, lenders, and buyers will all be breathing a sigh of relief at the news, adding that it would be a catalyst to get the market moving again. There you have it. I'm going to prepare another article, so apologies for quite a bit of movement on my end. So, what else do we have? Of course, some buyers have been holding off in anticipation of a cut some time, but mortgage rates on the street have been softening over recent weeks anyway. And we've been seeing that over the course of a few weeks and probably even months in terms of that sentiment. One thing that we do know is that when we look at sort of market sentiment and we look at the data, we know that there is kind of a lag between the two. We know that on day by day basis, we can see that there are quite a few, even landlords, dare I say it, that are feeling a little bit more upbeat. And this is despite, yes, so much regulation, which we won't touch upon too much on today's call. And if you do want to find out more about that, you could jump on other videos that we've released over the course of the last couple of weeks. So going back to this article in terms of activity. So what we do know is not just buying and selling. So the move will have other impacts on lending market too. Ryan McGrath, director, second charge mortgage at Pepper Money. So this could usher a new cohort of homeowners who, as they establish themselves, may consider putting their own stamp on their property in the form of home improvements. Homeowner loans can be another way of homeowners to fund these works without interrupting their current mortgage rate, particularly important for those who may be more favorable fixed rates. That's interesting, and get, I guess, the economy moving with construction and everything else, which this other part is, I guess, alluding to. So, said the rate cut would also be good news for SME properties investors and developers, who said were key to providing future growth in the UK economy. So, that's a mouthful for sure. Let's look at this other article, which is from The Negotiator, which is along the same lines. Let's look at, before we go there, let's have a look at some questions that we may have here. So, how can Bank of England base rate cut directly impact mortgage rates for us? Well, that depends if your mortgage is coming up for review, and I guess right now there is a lot of lenders who are very competitive with each other, which is a great thing. And that's also even prior to the Bank of England rate cut, they were already reducing ever so slightly because it's so competitive. Obviously, they want the business and they are competing against each other. So, and absolutely right. Yeah. So the banks follow the rate cuts of central banks. Absolutely. That is correct, Ev. So let's look at this article here, which this was a few days ago. Reaction: bank cuts base interest rates as inflationary pressures ease. The Bank of England decided to cut base interest rates today 0.25% to from 5.25 to 5%. So the Bank of England has cut their interest rates. We know this. Property industry eagerly awaited the outcome. Major lenders such as Halifax, NatWest, and Santander all cut their mortgage rates in anticipation. As I said, it was just done before. We all knew we would lead in this way. Industry reaction: Richard Donald, Executive Director of Research at Zoopla, says the cut to the base rate will deliver a further confidence boost to the housing market rather than heralding the start of the big drop in mortgage rates. And there we have the lovely Nikki Stevenson's again with her statement. And let's jump on to another article. From Landlord Today. So Bank of England reveals interest rate decision. So again, you have those the rate cut. We have another comment here by Guy Glittins from Foxtons. Always interested to see an estate agency's view on this, especially from Foxtons. So we've already seen monthly mortgage approvals sitting at consistently high levels as pent-up demand across the market has been released. And in recent weeks, mortgage rates have continued to trend downwards, with several 5-year fixed-term mortgage available with rates below 4%. With interest rates now starting to fall, we only expect that these positive property market trends will intensify. I am curious for anyone listening out there, especially buy-to-let landlords, whether you are opting to go for the longer term 5 years fixed, or you rather take the hit on the lender's fee, which typically is higher for the 2 to 3 years, and review and take your chances of review it again in 2-3 years. I'm getting a mixed batch of this, but more so I'm getting buy-to-let investors opting for the 5-year fixed rate and not take the hit again with the lending fees. So here you have another one. This is a more updated article on the 6th of August. Again, this is by Landlord Today. Specialty lenders cut buy-to-let rates yet again. The mortgage works will today be reducing rates by up to 0.45 percentage points across its product range, with rates starting from 3.49%. The new rates include 2-year fixed rate purchase and remortgage. Buy to let at 3.49% with a 3% fee. Wow. I mean, 3.49%. That's pretty amazing. I don't believe I've seen that since the beginning, since last year. 3.49%. Again, it comes with that 3% fee. So available up to 65%. You won't get that on the 75% loan to value. And a 5-year fixed rate purchase and mortgage limited company buy to let at 4.59% with a 5% fee. That is a whopping 5% fee, available up to 70% reduced by 0.25%. So it seems we are moving in the right direction. And hopefully this will help some buy to let investors sort of ease that. As I said, I've been speaking to quite a few landlords who for months have been just trying to make ends meet and doing everything possible not to lose their property investments. So there's also a 5-year fixed rate purchase and mortgage limited company buy to let 4.99% with a 3% fee, available up to 75% loan to value, reduced by 0.30%. And the 2-year fixed rate purchase and mortgage limited company houses in multiple occupations at 4.94% with a 3% fee. So again, for those of you HMOs out there, I hope this gives you some room to breathe and be able to make those numbers work. So Joe Avon, Senior Manager, Buy-to-Let Mortgage Works, says, we are pleased to announce more rates cut as it further demonstrates our ongoing commitment to brokers and landlords. These latest reductions make us one of the most competitive buy-to-let mortgage lenders in the sector, with rates now starting from 3.49%. So there you have it, guys. When it comes to the most competitive, at least this is what they claim, when it comes to the most competitive rates out there, buy-to-let mortgage. So the mortgage works. You've heard it first from us. For your landlord, we always bring you the news. The mortgage works says that they're the most competitive in the industry right now. So perhaps pick up the phone, give them a call. I will always recommend using a mortgage broker. What you pay them eventually, only if you decide to proceed, it's minimal compared to the work that you get, and always benchmark them. Of course, I always recommend to use different brokers. Whilst we're on the topic of mortgage brokers, we have a special guest tomorrow on our webinar. Now, if you haven't registered already, make sure you register. The link will be on the description, and this is an opportunity for you to ask any questions and even book an appointment with our specialist mortgage broker, which won't cost you a penny until you actually decide to actually use them. So make sure you register. The link will be on the description. So meanwhile, Landbay has cut rates by up to 20 basis points on some mortgage products. So the latest cuts are to its standard 5-year fixed rate HMO multi-unit freehold block. It cuts rates by up to 20 BPS on standard 5-year, and so forth, and it talks about Landbay here. So let's jump on and see if there's any other further questions here. So we have a question here. Danny, do you think that generally speaking is the whole trend not to have a property one way or the other? I mean, this is what I see happening in other countries using several tools. So when you say not to have a property one way or the other, Ev, I'm assuming you're talking about property investment. And that's a great question, and something that we're going to touch upon very shortly, as to whether it's even worth having a property investment in 2024, but more specifically looking at the pros and looking at the cons. So stick around for another few minutes, Ev, and this, I hope, will answer your questions. And then we have another question. Is there any key risk we are looking at due to this base rate cuts? There isn't any key risk that I know of. In fact, if anything, it will facilitate you to be able to perhaps make your numbers work as a buy-to-let investor. It also is an opportunity for any landlords looking to exit the market. that to perhaps make the most of the activity. So we are seeing activity in terms of buyers at the back of these rate cuts. So if you are buy to let landlord who simply perhaps has far too much leverage that you would want to kind of level out, then this perhaps will be an opportunity to get in touch with a local agent. I know there are a lot of deals happening at the moment whereby properties are not even being put on the market. A lot of other buy-to-let investors who do have cash or cash rich are taking up some of those buy-to-let properties, and they don't even hit the market, which is a great thing to happen. Otherwise, there are tenants, of course, and this depends on what part of the UK you're at. There are tenants buying properties, and in fact, whilst we're talking about mortgage rates and mortgage companies, there are mortgage companies that specialize in providing mortgage packages to those tenants who buy properties off their landlords. Crazy, I know, but you can look this up, and they also give incentives in terms that the tenant wouldn't have to give a deposit to be able to buy that property. So look that up definitely and see if that's something that may work for you. Now, on this same topic, I wanted to talk about a couple of things. So firstly, I wanted to jump on. Let me have a look here. This was Forbes July the 11th, 2024, as to what they thought would happen. And I think they were bang on. I like always to look at articles as to see how far off the mark they were. And looking at this, they felt that the rates would be cut some point in September. Yes, it did. And that at the back of those cuts, there will be more. There will be more activity. So did they predict 0.25% taking it to 5%? That's exactly what's happened. And looking at whether the activity would this will spark activity, and yes, it has. I guess you wouldn't necessarily have to have a crystal ball for this, other than just really following the sentiment. So the outlook for lower interest rates and mortgage fixed rates pricing looks more favorable, particularly as lenders are currently financially strong and have an appetite to lend. While lenders should be competing for market share, and that's exactly what's happening, and that's why the rates were going down even before the decision of the Bank of England. Many borrowers may wait for further rate reductions before committing to a move. I had someone ask me the other day, Danny, would you wait for further cuts before buying property? And of course, this depends whether you're just a buyer as an end user or whether you're a buy-to-let investor. I personally wouldn't be waiting around. I don't expect any further huge cuts. There will be probably more. I don't think there will be huge. And even as we progress, where there's a more positive, there's a market that's more positive, equally prices will increase. So as a property investor, absolutely, I wouldn't be waiting around. Whether I'm buying or whether I'm selling and looking to sell some of my stock, I wouldn't be waiting around. I think the market sentiment is great as is. What difference will Labour government make to interest rates? So the new government has made it clear, has no intention to tighten fiscal policy and to boost productivity and growth. But Dale's Capital Economics say Labour plans to raise public spending finance in part by higher taxes could result in a little more economic growth. Let's stay here for one moment. I want to leave this for last, but let's stay here for one moment. Very specifically looking at the part with regards to taxes and how they intend to raise those taxes, because there's something that's concerning in an article that I wanted to bring to your attention. And that is about taxes and how, if ever, that's going to be impacting landlords. Now, I found this article, and we're digressing a little, but it's based on the same umbrella. Potential capital gain tax changes could cost landlords to £11,000. Let me explain with this article. So what this article is pointing out is that the UK landlords could be £11,000 worse off on average if capital gain tax rates are adjusted to match income tax rates, research revealed. Now, where has this thought of capital gain tax even come from? Well, that has come from a recent speech from Rachel Reeves that she gave, and that is that there may be some harsh decisions to be made, but also where is the gap of the 20, I believe it's 20 billion. I don't want to give misleading information. So let's have a look at this. So when it comes to Rachel Reed's recent House of Commons speech could be part of a broader measures to address the 20 billion funding gap. Again, the 20 billion funding gap. So a lot of people are speculating that this could be a way whereby the government is looking to increase the tax. How will that work exactly? Well, landlords and those with second homes are subject to capital gain tax on any profits from property sales. Under the existing rules, basic rate taxpayers pay 18% capital gain tax, while higher rate taxpayers pay 24%. Now, if capital gain tax were aligned with income tax, figures would rise from 20% up to 40%. So again, that's if, and this is all speculation at this point, but I mean, given the speculation that we've seen over the course of so many years, I would say easily a good 50% of them actually come true. As a landlords out there, I hope that this doesn't hold true. But there could be, there's lots of stuff coming out of the woodworks with Labour. So let's hold tight and see whether there's any truth to this potential capital gain tax adjustment to match and be aligned with income tax. That certainly will be a blow to a lot of landlords out there. So let's look at here. Sean Moore, a tax and financial planning expert at Quilter, said during Labour's election campaign, the party was tight-lipped on its plans surrounding capital gain tax. So it seems like they're holding the cards very close to their chest on this one. Well, senior Labour figures were forthright in their conviction, and the party would not raise national increase or income tax. No one was willing to get drawn on what it might do to other taxes, such as capital gain tax. If plans such as aligning capital gain tax with income tax rates do become a reality, then we could see some significant repercussions in the short and long term. What short-term repercussions would this make? Well, first of all, if there's any truth on this, or if the public starts to think actually this may be where it's going, the short term will be a lot of landlords out there will probably be selling their properties very quickly. Long term repercussions. It could be that a lot of buy-to-let landlords will decide to absolutely not even enter into the market, especially if they know that capital gain tax is going to be closely aligned or completely aligned with income tax. So whether there's going to be any truth to this article, again, if you're a landlord, I'm sure that this is going to make you very nervous and not something that you'd like to see. So let's move on to any further questions. I don't see anything. How do you think? So this from Wise Process, great to see you. Great to see you too, Wise Process. How do you think that rate cuts will affect a rental yield? Well, positively, if you are able to jump on to a rate cut, an interest rate, which I've already shown. A lot of banks, a lot of lenders have adjusted those rates, some up to 3.5% or thereabouts. Granted that those lender fees have gone up as well. And obviously as well with 60% loan to values. If you're able to secure any of these deals, then your yields are going to definitely be positively impacted. And also it depends, of course, if you're going to adjust some of the properties that you have. But looking at the mortgage rates that are happening at the moment and how also, I know that Savills, and I shared this before, just sharing this Savills forecast for 24 to 28. the U-turn that Savills did recently with regards to their forecast, and they took this into consideration, this rate cut that they knew they will cut that was coming. They took this into consideration when making these projections, which is 2.5% for 2024 and keeps on growing in terms of the 5-year forecast. 2025 3%, 2026 4%, and 2027 5%, a total of 20% increase over the course of that 5-year projection. And of course, they are betting on the market and mortgage rates to be able to facilitate that, because if they didn't, I'm sure that they would not be able, wouldn't be forecasting this. And in the same way, we have Zoopla also with their most recent, the last week, with their most recent projections. So key takeaways: the housing market continues to adjust to 4% mortgage rates. Yes, we've seen that. House prices have been broadly flat over the past 12 months, but over the first half of 2024, they've been higher across the whole of the UK. House prices are now on track to be up by 2% higher by the end of year 2024. Now, if you remember Zoopla's forecast, and if I remember correctly, they had forecasted a 2% drop in prices for 2024. And as they follow the market sentiment and follow the data, they can see that there's a trend upwards. And they have obviously naturally adjusted this to 2% now up instead of down. So a U-turn by Zoopla also. Housing market is the most balanced it's been in 5 years. The housing market continues to adjust at 4% mortgage rates with positive signs and increased activity. And this was a week ago. And of course, that activity is even boosted more after the decision of the Bank of England, which was anticipated. House price inflation remains static, but it's still negative in the south. So the UK house prices have edged 0.1% higher over the past 12 months, increasing by just 310 to 265,000. Annual price inflation ranges between 1.2%. Now, listen, guys, one thing that you are probably very aware of, there are two markets happening here right now in the UK, especially in England specifically. So you have the north, where there is more growth in terms of prices, and you have the south, which is dipping ever so slightly. So as you have these two markets pretty much doing opposite things, opposite activities, and then what happens is that we're finding a flat line when you look at it overall. Over England, you see it either flat, dipping ever so slightly, or perhaps even increasing ever so slightly, because it's balancing out based on the two markets, the south and the north. And equally, when it comes to rentals, we're also seeing something similar, because the truth is, especially when it comes to London, it seems that we have reached that peak. There is only so much rents can increase, right? That being said, there were some new figures that had come through, which we shared last week with rentals. So if you haven't seen that, do check that out, because of course that's also very closely related with the price increase and also the mortgages. Okay, so I promised you that I would look at the back of this, the pros and the cons of owning property investment for 2024. And that's something that I want to dive into. Before I do, I have another question here by Eve. I hope I'm pronouncing that correctly. What is the case for foreign buyers? That's a good question, Eve. And when it comes to foreign buyers, I would say it's definitely impacted the lower end, especially when it comes for London. So on the lower end, it does impact the prime London sector. Foreign buyers are also sensitive to, of course, especially if they are having mortgages. The truth is that most foreign buyers don't. They are cash buyers, but we see more of that on the premium side. When I say premium, I'm talking about 3 million, 5 million, and even super prime, which goes even across to 10 million and above. That sector isn't impacted as much, if anything, when it comes to mortgages. Of course, there is an impact in terms of sentiment and confidence in the market, but in terms of ability to buy property, it's not really impacted at all, if I may say so. when it comes to super prime. So I hope that answers your question when it comes to foreign buyers. We should do a live stream when it comes to foreign buyers and what they're doing at the moment. The truth is that the UK continues to be very attractive to foreign buyers. This is for several reasons, but some of these include, but not exclusively, of course, is that the lack of supply, especially in the rental sector, and that helps to that supply and demand is very attractive to investors from all across the globe. That rental demand is still there, and it is going to continue to be there over the course of several years. Of course, if Labour does deliver with their promise with building 1.5 million homes, and it depends what sector they're actually doing that, whether that's going to change that dynamic. But also in terms of us having a strong legal system for many, many years. That's something that's very attractive to foreign buyers. Of course, you can go to somewhere in South America where perhaps some areas may be booming in terms of property, somewhere in Asia, other parts of Europe. But obviously, what does concern a lot of investors is what kind of risk they will have in terms of their property and how they're being exposed to whether those properties are going to be taken off their hands, whether that's government or whether that's, savvy fraudsters. We've seen a lot of cases in other countries. The legal system here in the UK is very safe, and people across the globe know that. And people will continue to park their money here in the UK because of that. So I hope that answers your question, Eve, with regards to foreign buyers. But it will be definitely good to dive in deep into foreign buyers and what activity is happening with them in the current market. So I hope that's giving you some insight with regards to mortgage rates. Again, 3.5% mortgage rates we're seeing from some lenders, with some fees between 3 to 5%, and some landlords being able to make that work. Also, specialist lenders as well, with HMOs also coming out with some packages that seem very attractive, especially more so than at the beginning of the year. And hopefully some landlords can make these numbers work. What I'm wanting to be jumping onto right now, as promised, is the big one, which is being a landlord still worth it in 2024? And I've been asked this question for, I guess, from the beginning of the year and the end of last year. Some landlords decide that, in fact, it is still worth it, and this is their pension pot, and they will make adjustments to make sure that those numbers will continue to work. Of course, we are no longer in the same markets that we were sort of 5-10 years ago. And if you're going to continue playing the field in the same way, it's just simply not going to work. So for those of you that can make adjustment, whether that's incorporating, scaling up, having the process and systems to be able to navigate through the regulations of the government and so forth, that's exactly what you need to do. So let's have a dive into this article. So is being a landlord worth it in 2024? If you are a landlord, okay. So let's look at the benefits of being a landlord remains as appealing as ever. Landlords can expect a good return on investment in the long run, and demand for rental property remains high, not to mention the number of landlords, pre-tenancy resources. Okay, so there is a key point here, and I think this is the important part throughout this specific article on whether it's worth being a landlord right now. Property has always been, in my opinion, but now more than ever, is long term. You invest in property, you should be investing for 10 years, absolutely minimum. Because otherwise, especially during this period, it's not going to work out for you if you then decide to want to sell your property in the next 5 years, especially looking at the mortgage rates as what they are at the moment. A lot of people can hold out and be able to, ride the wave at the moment. If you can make the numbers work right now with the mortgage rates, you can make them work certainly in 5 to 10 years' time. Buy to let is no different to any other business. And I know that a lot of renters out there get really annoyed saying, well, buy to let, looking at it as a business, these are people's homes. And I get it. I do get it. I understand it's people's homes, but these are also landlords trying to make ends meet and trying to achieve whatever goal that may be, whether that is a pension pot, whether that is to leave it to their children, whatever that may be. So again, treating it as a business. And what I mean by that is business don't always make profits. Business don't always break even. Some businesses are going to have a good 2-3 year run and going to make great profits. Another 2-3 years, they may break even. Another 2-3 years, they may make a loss. And this is the same way. So it really amazes me when I see landlords who perhaps are going through a period of a 1 year or 2 years where they're negative, not making a profit. And they say, buy to let is over, buy to let is dead, and we're just running away. And hang on, Mr. Landlord. So share with me what profits you made over the course of the last 5 years. They show me, and they show me capital growth. They show me the yields they've made by making the most cheap money over the course of around about 10 years. And it's like, really? You've been winning over the course of 10 years and you've been breaking even over the course of 2 years, and you're saying that this is no longer worthwhile? Again, let's look at the long-term view on this, guys, because that's where you're going to win with property investment. And in my opinion, any investment out there. But let's dive into the article, Pros of Being a Landlord in 2024. Let's start with the good stuff. There are still many benefits of landlord 2024, most of it being income, demand, and security. So on the same point of income, demand, and security, when you do invest in property, there are 3 buckets that ideally you want to hit when you invest in property. And this is what separates this from shares and, dare I say it, crypto. And that is, your tenant is paying the debt for you, number one. Number 2, if you're lucky, you'll also get that tenant having some cash flow for you. So you have enough to pay the mortgage. Most buy-to-let investors that I know, savvy ones at least, have interest only. There are many reasons for that. I'm sure you know, because you savvy landlords that jump into these calls are very aware. But you'll also bring cash flow from that. So again, some benefits from my point of view. Tenant pays your debt. Number 2, you have cash flow. And then the biggest one, guys, is that you have capital growth. And capital growth is where you'll always win. That's where the big money is. I see so many landlords out there chasing yields and saying, Danny, buy to let is dead because I'm not making any cash flow. And yes, of course, it's not sustainable if you're having that experience for long periods of time, or you're even negative, but you're going to always win on the capital growth of those investments. So jumping back into this. So high demand. Where were we? So you had being income, demand, and security. Good long-term return on investment. The main reason anyone becomes a landlord is to earn additional income. 2020. Landlords can still expect a good return on investment, but higher mortgage interest rates mean you'll have to be in it for the long haul to make a decent profit. Again, there are some of you out there that can ride the wave and just hold on if you can make the figures work. If you're a new landlord, it's important to remember that becoming a landlord is not get rich quick. I'm sure a lot of you online at the moment will know that. It may take some time before you can see some significant returns. And again, in my opinion, the significant returns will always come from the capital growth as opposed to those yields. High demand for rental properties. Demand for rental property remains extremely high, with new data showing an extra 120,000 rental homes are needed to meet this demand. In fact, there is so much demand for rental properties, guys, and a forecast for rental properties that we've seen these big corporations jump in as well. We know that the build to rent industry is booming right now, and you've got the likes of lenders getting into build to rent. You've got the likes of John Lewis and other corporate companies getting into that, and there is a reason for that, because demand for rent in the UK will continue to increase accordingly. Listen, guys, if you've just jumped on, I have shared, because this is a mortgage topic here, and the Bank of England, we are having that webinar tomorrow. It's at 6:30 p.m. The link is going to be in the description. We're going to have a mortgage specialist on board answering all your questions. Jump into that webinar. It's one not to miss. So Demand for rental property extra, as I said, long-term security. Renting a property comes with a range of long-term benefits for landlords. Not only does it provide an outgoing source of income, but could also be saved as a pension for use or as an emergency. It also provides long-term asset for security for your family. So cons of being a landlord. So although being a landlord is still worth it in many reasons, there are of course some drawbacks. Let's look at drawbacks. I'm sure you're familiar with quite a few of them. Uncertainty around reform of private rental sector. We touched upon this. You can review the videos that we've done so far. That we dive in deep. We've got, the removing of Section 21 and people being very nervous about this, landlords specifically. And when it comes to Section 21, I'm just going to touch upon it very briefly. So when it comes to Section 21, of course, the government has proposed an abolishment of this. It was already there with the Conservative being a little bit more sensible about the abolishment in terms of time frame, getting the court systems up to date before they actually implement the abolishment. The Labour has come in, quite aggressively and said, we're not even going to wait for the court system to be up to date. We're going to do it immediately because this is necessary. Very interesting. There was an article I saw, by the way, that Matthew Pennycook looking at some method of what was it? A test stress, which is a method used in France. It's a very interesting article. If you don't know about it, make sure you subscribe to the channel, because there's a video coming out on Saturday talking about this stress test if you want to evict tenants. Basically, what it means that you cannot evict a tenant if it's going to leave that tenant worse off. So there's a stress test that's applied, and if that's the case, you can't evict the tenant. Crazy, I know, but this is something that the Housing Secretary is looking at, and that's just tied into the Section 21 abolishment. So for those of you who are just jumping on, again, mortgage rates 3.5% with 3% fees, and this is something that perhaps could make numbers work for a lot of landlords out there. And we're just going through the uncertainty around the reform of the private rental sector, the pros and cons for landlords 2024. So right now we are going through the cons, and we are looking at the Renters' Right Bill, which again, there's going to be a video coming out on Saturday. So expenses, let's look at the expenses when it comes to the cons. Tax on rental income, especially I know for you guys who are not incorporated, this is a huge hit for you guys. As you know, you can no longer deduct those interest rates. So right now may be a good opportunity when there's more, there seems to be more activity in the market. Maybe if you want to continue to be in property, being incorporated will be the most sensible thing to do. If you can't make those taxes work, my advice is you speak to a tax expert. Maybe it's time that you perhaps sell some of your stock to be able to then make the adjustments that you need to make to buy more property if you want to stay in the property industry and make those taxes work. But with mortgage rates now being reducing, and those lenders being more open and being able to offer those 3.5% mortgage rates with 3 to 5% fees, then perhaps this would be a good opportunity to make those adjustments and restructure. But going back to the expenses for landlords and the cons, you've got buy-to-let mortgage, tenancy deposit scheme. I don't see how that's an expense, but okay. Gas safety certificates, of course, you do that every year. Energy efficiency certificates, that's every 10 years. EPC, EICR, the electrical installation condition report. By the way, I always like to point this out, guys, because there is also, we're working on some content whereby we are sharing the most common mistakes that landlords make when trying to be compliant, and how they unfortunately fall into the wrong side of the law when it comes to keeping all this paperwork ready. And one of the biggest ones is the EICR. Because with gas safety certificates every year, then you know that happens every year. It's like, okay, I remember I do it every year. But when it comes to things like the EICR, that's every 5 years, and then suddenly you completely forget and you fall in foul of the law. And that is something that will catch you out. Don't fall for that, because the fines and the repercussions and the potential issues that you may have with your tenants, should you then decide to evict them and not have this paperwork. I've seen it before, and it's a complete nightmare. That's not where you want to be. I definitely assure you, you do not want to be there. Repairs and maintenance, of course, with inflation shooting through the roof, especially over the course of the last 24 months. Repairs and maintenance has been a big downfall for landlords, and something to take into consideration. For anyone just joining, we'll be looking at the pros and the cons for landlords of 2024, and we're currently just reviewing the cons, and the expenses is some of them, some of the downfalls. Landlord's insurance has also become quite expensive together with inflation. Furniture and decoration, especially, of course, if you were making the most of the furniture, the tear and wear tax advantages that you could have had sort of in the last few years. Now that's no longer the case. It's become a little bit more complex, time consuming, and you don't get the benefit that you used to get before. And that's just again something that we're seeing more trend of, which is why perhaps landlords that are treating this more as a business, structured, have a smooth operation, those are the landlords perhaps that will make it worth their while. Furniture and letting agency fees. Ooh, so dare I say it's absolutely. So agency fees that can go anything from 8 to 15%, depending on how much service you require from them. But one thing I am seeing definitely is more and more landlords opting for a property management service, because of all the complexity and the regulations. And most landlords, believe it or not, especially those who own perhaps around 3 properties or below, this isn't their full-time thing. In fact, 5 properties even, and this isn't their full-time job, and they don't want to be responsible. I mean, to a degree, legally, they will continue to be responsible, but they don't want to be keeping on top of all the regulations. I mean, if we know anything, there's like 172 or thereabouts regulations and legislation that landlords need to adhere to, and with labor in place, that's increasing even more, and they simply just don't have the time or want to even entertain that type of responsibility. So, is it worth it being a landlord in 2024? Again, having looked at the mortgage rates now beginning to ease off, and having looked at these pros and cons, with the Renters' Rights Bill on the horizon, as well as new energy efficiency requirements. Of course, we have Ed Miliband, who is pushing this agenda across, which is 2030, to have a rating, or I believe it's C rating. A lot of landlords now sort of scratching their head and thinking, wow, okay, I'm going to have to put my hand in my pocket to start to make alterations to the property. And this could be alterations from changing the roof, from changing windows, doors, boilers, heating systems that will run into easily the thousands and thousands of pounds. So these are maybe landlords who decide to exit the market now. And of course, if you've just jumped in, we've also shared some rumors and some articles talking about the capital gain tax potentially being aligned with income tax, which will see that increase to 20 and even up to 40% respectively. All this in combination may push a lot of landlords to just exit the market. Now, I'm not here to be scaremongering. I'm just saying that despite all of these rumors and these statements and these regulations, there is still a place for buy-to-let property. And this is exactly what we've been looking at. At the same time, an average of 15 applicants for each rental property advertised means that demand is double the pre-pandemic and continues to be so. You launch a property in today's market, as long as you've done you've kept that property in good condition, that property is going to fly. So there you have it. And this article was by the National Residential Landlord Association. Do some great work. And just looking at any last questions from you guys out there, do you believe that current cut rates may be just for reasons of rising psychological factor of this global economic instability and inflation, and would increase again in a couple of years? I listen, Ev, I'm not an economist, but I do know that getting to grips with inflation, which was the biggest driver of increasing those interest rates, I think getting a grip to that I think getting a grip to that was very important. Having now been able to what seems like to keep that inflation around about the 2% mark, which is what they're looking for. I believe that it's something that's here to stay as long as that inflation keeps at that figure. I hope that that helps. Of course, something that we're monitoring very carefully is the US election, which impact other countries across the globe. And that's something that we monitor very closely. And in fact, we'll be doing a few videos on that as well. So again, guys, if you're not subscribed to the channel, please do. There are other news that we're bringing out all the time, and we want to keep you posted. Let's see if there's any other questions here. For those of you that have just jumped on, this article here was an interesting article talking about mortgage rates up to 3.49%. Of course, we still have very high lender fees. And the only way that you're going to be able to make the most of these great fees of 3.49% is having those high lender fees, but also having a lower loan to value of up to 65%. That's where really you're going to be able to see the biggest reductions in mortgage rates. But even if you're looking at 75%, I believe that there are some adjustments there that still work. So if you look at here, you've got 4.99% on a 75% loan to value with a 3% fee. One of the things that we identified was that Mortgage Works, at least, they're claiming to say that they are the ones with the lowest. So the latest reduction make us one of the most competitive buy-to-let mortgage lenders in the sector, with rates now starting by 3.49%. We're all about adding value to you guys here and gals. And therefore, I hope that this is something perhaps you can, if you are looking to remortgage, that you can perhaps start jumping on the phone tomorrow and making some inquiries. I have one more question here from Eve, and then we'll wrap up for the evening. Do you believe that current rates may be just okay? We've already answered that question from you, Eve. So thank you very much for all jumping on. And just a reminder to all of you out there, we have a webinar taking place tomorrow with a mortgage expert, buy-to-let mortgage expert, who will be able to answer any questions for you. And it's just a great opportunity for questions. Thank you so much for joining every Wednesday at 6 p.m., 6:30 thereabouts, and really appreciate everyone joining. Thank you so much. Have a good evening.